Thank you very much. It's a great honor.
Close to the tracks, around 500 houses make up this.
Hello friends, in this video we are going to tell you how the tech giant Apple was dethroned as the world's largest public company Wednesday after the oil giant Saudi Aramco started trading publicly. Aramco sold 10% the daily limit on its opening day and is now worth just shy of $1.9 trillion. Apple was valued about $1.2 trillion after Tuesday close. Aramco earlier this week raised $25.6 billion in its initial public offering, which valued the company at $1.7 billion. Apple had held the top spot since February, with Microsoft not far behind the Silicon Valley tech giant, and also became the first company in the world to be valued at $1 trillion in August 2018. Aramco mammoth value is also nearly $1 billion more than that of its competitor British Petroleum, Royal Dutch Shell, Exxon Mobil and Chevron combined. Last month, Market Insider reported that Apple was worth more than the entire US energy sector. At the time, Apple was worth $1.17 trillion and the S&P 500 energy index was worth only $1.13 trillion. Aramco valuation now dwarfs this figure. The $1.9 trillion figure also means that if Aramco were a country, it would have the 9th largest gross domestic product ahead of Brazil and Canada as just short of Italy. Saudi Aramco is the kingdom's state-owned oil company and the most profitable company in the world. In the first 3 months of this year, Saudi oil revenue totalated 169 billion riyals, that is $45 billion, and non-oil revenue amounted to approximately 76.3 billion riyals, that is $20 million. Despite analysts' negative view on the value of the oil giant, Aramco reported that private applications for its IPO had been oversubscribed, with over $45 billion in bids for Aramco stock and counting according to lead managers, Samba Capital. Considering their total 2018 net income reached $111.1 billion, the amount raised in the IPO could exceed 50% of that income figure, all which selling only 1.5% of the company's shares. In the past, when the Saudi Arabian government needed more revenue, they cut production to drive price higher and convinced other members of OPEC to do the same. In the recent year, they have included non-OPEC oil-producing nations in those discussions, like Russia calling this large group OPEC Plus as the swing producer. Saudi Arabia had tremendous influence with the cartel, but as US production has increased, it started to become apparent the kingdom might be losing its swing producer status to the United States. John Rutledge, Chief Investment Officer at Safran, recently wrote a piece about this. The future, when the Saudi government has a need for more cash than generated by the value of planned oil production, they will no longer need to produce and sell more oil to balance their budget, writes Rutledge. Instead, they can simply sell or buy Aramco shares in the open market. So instead of managing oil production, the kingdom will start to manage its holding of Aramco shares. It remains to be seen if this increases oil market volatility or decreases it. On the one hand, reporting to shareholders requires transparency, and that transparency may cause Aramco to work on a more stable production schedule. This would be a stabilizing factor and a volatility reducer. On the other hand, the low cost of production for the Saudi versus the higher cost in the United States has allowed the kingdom the flexibility for more rapid changes in production, and this would mean much volatility on the extremes of the price curve. The big picture remains that long-term supply and demand will determine the price that crude sells at. The Saudi Arabia IPO might actually make this statement true than before the IPO. So friends, this was the news. If you like the news, you can please subscribe the channel and press the bell icon so that you can get the notifications of the video as soon as possible.